Lagos City, good morning, good morning, good morning. It is a sad Monday. A sad Monday for I don't know, a lot of people. I guess if you follow basketball, if you watched it during the 2000s, tributes continue to pour in for Mr. Kobe Bryant. I am Rotus. It's Business Express on Smooth 98.1 FM. Please, we're talking MPC decisions. We're talking realistic payback periods for loans. We're talking what else? Federal government has a new scheme for agriculture. They want to borrow from our pension funds. We got a lot to talk about. Sending your messages 0809 444 0981. We're also streaming on YouTube. We're also on Twitter at Smooth91 FM. Also follow me, Rotan Quotes, ROTANKWOT. But look, on the Kobe Bryant news, very, very devastating. He also, something that needs to be remembered is that Kobe Bryant was a big time investor, and just for this, no, it wasn't just about sports. Since we're talking business here, he started a company with the founder of I think it was Web.com. I think his name is Jeremy Stiebler. It was Bryant Stiebler. They've got about $2 billion in assets. They invested in Alibaba. They invested in Dell, the makers of personal computers. They even invested in Epic Games. That's the maker of the popular game Fortnite. What else did he invest in? He started a new company, a multimedia company called Granite Studios that is supposed to be telling, multimedia stories about sports. He won an Oscar for something he wrote for Dear Basketball. So it was a big investment. In fact, the Los Angeles technology community has been mourning his passing, along with so sad his daughter and other people that were in that helicopter crash that happened. So rest in peace to Mr. Kobe Bryant and his daughter and all the other people that we lost. It's a sad, really really sad loss for a lot of people involved. But his companies will continue. See, that's another thing that we've talked about in Nigeria here. How do you build a company that continues to last even after your passing? What kind of structures do you put in place in terms of corporate governance, in terms of operational efficiency that ensures that your legacy continues even after the owner passes away? How many of these companies can we say the same thing of here in Nigeria, to where if the owner goes, the company still lives? Because Kobe started investing in business in 2013. While he was still in the NBA, he started the Bryant Stiebler company. So with the way everything is running right now, his companies are still supposed to continue even after he's passed. All right. Who heard this ad over the weekend? Let's move on to payback of loans and how realistic they are. The quick credit ad. I'm sure a lot of people heard this ad over the weekend. Yeah, I heard it. Oh, they said, you can get up to what is it now? Okay, no. First of all, before we even get to the payback period, let's talk about the interest rate, because we actually talked about it on this show, and we mentioned the fact that quick credits, the interest rate had gone from what was it now, 1.7% per month to about 1.3. They cut it, and so that meant that your full year, what you would pay over the course of a full year, per annum interest was it went from 21% to about 16. And yes, it was reduced, which is good. However, tell me if you heard this ad. The ad said, all right, I think we might even have played it on Smooth FM as well. We played it everywhere. The ad said you can get up to 5 million naira, right? And you can pay it back in 6 to 12 months. And that's when my ears perked up. I was like, wait. Is that realistic? How if we're talking, because again, this is all stemming from the LDR, the loan deposit ratio, where a lot of banks are being pushed to lend. How realistic, and I'm asking you, how realistic is it for me to, if I'm in the real sector and I need funds to start my business and get it off the ground, how realistic is it for me to be able to pay back 5 million naira within 6 to 12 months? What would I be using the money for? Huh? It sounded a little, it didn't sound realistic at all, because if you think about it, if you're using your funds, what would you use 5 million naira to do? If you want to get a business off the ground, how much time do you need for that business to start generating returns? Yeah, in order for you to start paying it back, in 6 months to a year, it's just not possible. And again, this is not just the quick credit. This is across the financial sector. A number of institutions, yeah, they're handing out loans, yes, but the payback periods are just too short. This even translates into mortgages. Yeah, our mortgage. How many of us have mortgages that are up to 20, 30 years. And not most of the ones you see are around about 5 to 10 years. So it's again, we really need to look at the payback periods for a number of these loan schemes. Also, there's still the case that these loans are meant for salary earners. Yeah, it's still only going towards salary earners. I know there's risk involved in lending to people who are not salary earners, right? But if we're talking about the real sector here, and we're talking about being able to expand these things, how do we get it past salary earners? Or how do we get credit histories that are built to a point where you can actually give these loans out to folks that are outside salary earners? Let's see here. Papi K says Kobe Bryant is multifaceted. He cut across all spheres. Every time I roll a paper trash and make a basket, I shout Kobe. Now that'll always bring small tears to my eyes. Man, I tell you, that's from Papi K. Papi K, even me myself, I was tearing up yesterday. It was so tragic. He was just 41 years old, with so much ahead of him in terms of his businesses and investments that he was getting together. Let's see now. What's Prince is talking about the loan? He said, yeah, okay, I just said that. Prince says the loan is meant for salary earners, not business people. It's collateral free. All right, so Prince, what about who is in the real sector, Prince? What are we talking about when we talk about lending to the real sector? We need to look at that. But thank you for that message as well. Yinka says, but Rotus, we've been here before now. I keep insisting this system is rigged to kill you eventually. Last week, some lady approached me to come and buy a house for 18 million. I have to pay back in 18 months. That's ₦1 million a month. I just asked her, baby, if I have 18 months now, will I be in Nigeria? See, that's so Yinka is essentially going by what I'm saying. Seni says, good morning, Rose. This is from Seni. Good morning, Rose. I think the quick credit package is tailored for salary earners. Only payback shouldn't be more than 18 months max. That's from Seni. Thank you so much. Yeah, again, we need to look at these. We need to look at these things. Janet from ARM is here. Janet, good morning to you.
Yeah, hi, Richard. Good morning.
Welcome. Okay, so we've paid tribute to Kobe Bryant. We've talked about the payback period for loans. Shall we jump into the MPC decision from Thursday, Friday?
Yes.
Lagos, remember they shifted it a bit. It's supposed to be 20th and 21st. I think they moved to 23rd and 24th. So yeah, what did the central bank do? They kept things in place. They moved a few things around.
Yeah. So like I said, they met on Thursday, Friday,
Yeah.
and then they decided, or they voted really to leave the MPR rates unchanged. That's the monetary policy rate, unchanged at 13.5%. But the CRR, that's the cash reserve ratio, was actually changed for the first time in like 4 years. So it was increased by 500 basis points from 22% or 22.5 to 27.5%.
Yeah.
Basically, what that just shows is all of the heterodox policies that the CBN has been trying to go around right from last year.
Yeah.
So first from July, it started with increasing the LDR rate to 60%, and then come October, the OMO market was stripped, and then only the foreign investors and foreign investors and banks could actually participate in that OMO market. So what that did was that constituted about 20% of total OMO securities at the time. At the time, about 17 trillion was outstanding by the CBN for OMO securities. So effectively, about just 20% of that was left to to move into the market. That's excess liquidity, over 2 trillion naira moved into the system, or has the potential to mature into the system based on different maturity profiles. But basically what we're seeing is throughout this year, if you've been monitoring the overnight rate is one that shows the interbank lending rates between the banks overnight, or so, and then that has been quite low this year. I mean, it just went up once when they actually increased their CR, when the central bank actually debited banks for CRR, a sanction for that, for not meeting up the LDR requirement. So basically we've started to see some kind of CRR interjections by the CBN, basically, where, I mean, early last, that was like in October, they actually debited banks about 500 billion. That was when the first deadline for the LDR wasn't met, and then come December, another 650 billion was debited for not meeting up with the LDR requirement. So we're already seeing them go along those lines, but yesterday was more or less formalized, where Excuse me. So it was more or less formalized where, the whole concern of excess liquidity was painted out. That picture was painted out, and they actually increased the cash reserve ratio. But I believe the question now is what exactly is the implication of that. So basically,
Papi K is asking. Papi K, a number of other people are sending messages saying, why did they do this? Go ahead.
Yeah. So basically, what they're trying to do. Okay, from what they mentioned, it was the reason for that was to curb inflation. You've been monitoring inflation. We talked like a 20-month high recently of like 11.98% in December. But I mean, when you've been conversant with, if you're familiar with the way inflation works, you know that inflation is not exactly, that demand side of inflation. We see cost push kind of inflation.
Yes,
so,
yes.
What you generally see or what you generally suspect now is, just the whole concern on FX. Because when there's a lot of naira in liquidity or naira in the system,
we'll get dollars.
Exactly.
We'll
So, and then everybody has been in talks. I mean, if you've been monitoring the current account as well, you see how imports are, skyrocketing. You're seeing your services deficit expand significantly. All of that is because, there's a lot of demand. People just, the demand for foreign goods and services have increased significantly. So reducing the liquidity in the system, is aimed at curbing that excess naira in the system, basically. Okay. But then it's almost just counterintuitive because you're trying to also encourage banks to improve lending.
Thank you. That was the point I was about to make, and that's what Papi K, a number of people are asking. Yes, please
exactly.
Continue.
So I mean,
continue.
You just talked about GTB and how many of them have been reducing rates, trying to grow loans, trying to expand their loan books and all of that. So now you're having increased. So of the deposits they have to put about 27.5% of that in the cash reserve ratio.
Right.
I'll be with the CBN basically, and then also 65% of the deposit has to be given out as loans. So it's almost like it's not a very good sign.
Squeezing them. I'm defending the banks now after I attacked them for the loan paper period.
Exactly.
But you're squeezing the banks.
Exactly. And then it's just almost not the year for the banks really. Because after that you're also talking about higher charges. That's like, when they reduce the charges for the banks. So that's another story for for the banking stocks basically. But just painting that overall picture, paints that, it's just counterintuitive in that sense. But if you have to look at the monetary implications. So like I mentioned, when you look at their the CBN's balance sheet, you'd see that about 26%. They have okay. So there's the reserve ratio, that's the required reserve, and then there's also the statutory intervention reserve or something like So SIR, that's what it's called. So basically, what the CBN does. So that SIR, that's where you would have all those debits I talked about. The one that came in October, the one that came in but as that the latest data we have came in as at September. That was in the quarterly bulletin, and then it showed that about over 35% of total deposit is kept with the CBN. But then when you also look at just the required reserve ratio, formerly it was 22.5 before increasing to 27. Now 27. But now effectively at that time about 26% was held by kept with the CBN. But again, stating that this is all as at September, as the September period. So if you have to just look at that period and how much you would be required to meet up with this new requirement, you're looking at about another 200 billion debits from the banks, about 190 just to meet up with that. I got one more question for you, but let me quickly. Okay, Moses is pretty much going along. So this is a message from Moses. You increase LDR and then increase CRR. Again, LDR, loan deposit ratio, CRR, cash reserve ratio, and then increase CRR. That seems like a contrasting approach. You want to improve lending to the real sector and you remove cash from the banks. This one now, wow. Nenji, AIE, Yemi, I also see your messages talking about the salary earners and who the banks are targeting. Also, Prince comes back with the same thing. One more thing on the banks, right? Also Dorothy as well. Dorothy also mentioned everybody's on the towing the same line about the salary earners. Okay, so Yemi, Nenji, Dorothy, Prince. What about other folks? In fact, somebody sent a message here saying that they're not even targeting startups. They are just targeting salary earners. Okay, yes, you guys. Okay, if a non-salary earner comes to you and says they're looking for funds to start up, I think someone said it was a VC, kind of what Kobe Bryant was doing. Where do they go? And I'll allow you guys to come back with that. But Janet, for you, there's also and we celebrated this, at least us consumers, the reduction in fees, the whole ATM and the fees. So if you look at this year, is it a good year for it looks like going to be a tough year for the banks. Yeah, because their fee income is going to go down. Again, folks like Yinka and other people will celebrate that because everybody wants lower ATM fees and everything. But
from an investor perspective, if you're investing in the banking sector, look at LDR, you look at the CRR, you look at the reduction in fee income. I mean, is the banking sector still one to look at
so
for
exactly.
stocks?
So I mean, it's a tough play for them, you
Yeah.
know. But now you're just looking at the solid names that essentially, like the likes of GTB, who can almost, could almost get away with it because they have higher volume of transactions,
Right.
and so the charges may not, be muted by that. And then across board, we're still expecting that they actually grow loans, So I mean, yes, there's a lot of liquidity in the system, so there's a lot of liquidity in the system, but then you're still able to grow loans to some certain extent,
Okay.
So and that could come up, and then but it's a tough play because first you look at it from the asset yields that's going to contract because I mean bills or it's going to be challenged really because the treasury bills instruments are quite low at the moment, even though they are able to play in the almost market. And then you also look at the charges point of view as well. So fees and income also gets constrained.
Gotcha.
It's a tough play.
It's a tough play for the banks. Okay, let's go to quickly before we're running out of time here, but we'll go to pensions very quickly. But let me read this message from Blessing. Good morning, guys. Whilst the CRR increase and LDR increase seems contradictory, looking at the CRR increase from the CBN's perspective, I guess they're actually trying to force the banks to lend money to the real sector. As a bank, I'd rather lend out most of my deposits. That way, I won't have to be debited so much in CRR. This one, Blessing. All right, real quick.
Funny thing is, most of when you talk to some of these banks, they'd rather, I mean, because there's also the danger of creating bad
NPLs,
bad loans. So it's almost as if when when they first came up with the LDR requirements, it's like, okay, if you don't meet up with LDR, you have to do the CRR.
Yeah.
Some of them actually prefer.
Prefer the CRR,
so
than bad loans.
They...
Okay, real quick. So the federal government, they've decided they want to borrow what, 2 trillion naira?
Yes.
From our pensions. It's going to make people like Yinka blow his top. But should we be worried? They want to dip into our pensions now because they need money. What do you think?
So it's going to be quite significant. So currently, when you look at the breakdown for pension assets, just about 0.4% is gone into infrastructure fund currently, or the latest data we have from Pencom, just about we're talking about 69% is still in FGN securities.
Okay.
So making that kind of shift from about 0.41% of 10 trillion naira going as much as 20% is you can just try and picture that. So essentially we're talking about going from about 41 billion naira invested in infrastructure fund to about 2 trillion naira.
Wow.
Exactly. So no details were given. I mean, what is stated is it's a requirement, or it's stated in the Pension Reform Act, of 2004, where about 20% of the pension assets have to be invested in infrastructure, and then they've also stated that they would like to focus on rail, road, power, all these things.
Oh yeah, it always sounds good.
Exactly. But then I believe the point has always been managing the debt, growing your revenue to service the debt, and then the pension managers are always, I mean, at latest we've seen is they're trying to get better yields. So if you give them a better, attractive yields or at attractive rates, that they may not, they're looking at it from the PFA side as well, because you also want to be able to grow your PFA assets,
exactly,
going forward. But logically speaking, or just from the top, theoretically, you'd be thinking, yes, pension managers should focus on long-term investments like infrastructure fund. But I mean, the point has always been trying to manage this effectively, putting this to good use. Let us see results, let revenue come up, and let there be development, really.
Jennifer Mayor, thank you so much for joining us. Rainmaker sends a message talking about the Economic Advisory Council. We still haven't heard from them. Rainmaker, I hear you. We're waiting. Thank you all for your messages. I'll catch you guys tomorrow. Business Express on Smooth 98.1. Stay tuned.